New homeowners have lost $122,000 over this last year. Remember when I told you guys do not buy a house because the market's going down? You have agents out there saying it's a great time, the market's never been better. Look at this article from Yahoo. 45% of real estate agents are saying that they can't even pay their rent, yet they're trying to get you to go and buy a house. Now wait a second, why is that going on? Let's go on further, where it states that 45% of real estate agents who own firms, they're having a trouble paying their rent in the office. And that's 5% higher than in October and 10% higher than September's reading. Why would these interest rates tell you that, hey, now's the best time to buy? They're struggling to make their payments, whether it be rent, their brand new Land Rover that they bought a year ago, or whatever it may be. You really got to think about the advice that you're taking. We've been saying this for over a year. Hey, the market is not looking so good. Yet, let me give you an example. This particular house, it was sold back in April of 2022 for $475,000. They currently have it listed for $395,000. This seller was in a little bit of a denial. It started out at $440,000. What we're seeing is that sellers start out in denial and then all of a sudden they're trying to chase the market down. What's going to happen if this bill that is now being pushed to the Congress that's going to kick the Wall Street investors out of the housing market, the single family housing market? Now, what do I mean? Now, there's a bill that's currently being proposed that Wall Street investors are going to be kicked out of the housing market. And according to this, they're going to have 10 years to fully phase out. So every year they're going to have to liquidate 10% of their single family homes on the market for 10 years straight. Wall Street buyers that had helped bid up the housing market now could possibly flood the housing market and hurt sellers like this one who's chasing the market down, and all of a sudden we're going to see a flood. According to this article by Fast Company, they're saying that roughly as of June of 2022, 574,000 homes owned in the US are by hedge funds or by these REITs, that this bill is looking to kick them out. Potentially 500,000 homes are going to be thrown on the market. Do you think they're going to let them go out 10% at a time, or do you think they're going to hurry up and try to sell it before the market goes down further if this bill passes? I want you to pause this video, put in a comment below, are you struggling? Do you see struggles? We want to know. Share with us different struggles that you're seeing or that you see people in your sphere, whether it's family or friends that they're going through. We do care and we want to hear. I want to talk about the new homeowners that have lost $120,000 as the housing market prices drop. Let's go into this article a little bit further, because this is, again, they're just taking national stats. And keep in mind, back in 2007, 2008, people were jumping out of contracts because the housing market was falling. We already know that housing market cancellation rate has been up. According to the study by Point Two Homes, single family homes have been shedding about $223 daily. They're losing $223 daily. Over 5 million homes were sold in the US back in 2022, and a quarter of them were first-time homebuyers. Over 1 million homes that were sold to first-time homebuyers, and some of them have been pushed into that 2-1 rate buy down that you know is a big, big trap, especially when you're trying and you're hoping that the Fed is going to be cutting rates. So you're going to start seeing, oh my gosh, 6% rates are here, go ahead and jump. And yes, they are here. So according to today's sponsor, Tom Kirchmeyer at Fulcrum Home Loans, his information is in the link below. He's saying that he can get a VA buyer with certain criteria down below 6%, and an FHA buyer down below 6% as well. Conventional buyer, you're still sitting at 6.5%. Now that is a big change. With just 3 weeks or even a month ago, you're sitting at 7.5%. Is that going to change much? Well, let's look at this graph. When the interest rate changes from a 7 to a 6, you'll see a big difference. Now, these are your monthly payments according to this graph. Going from 7 to 6, you know, that is a big jump. Now we can't see it in dollar amounts, but you can kind of follow this graph and see how the interest rate changes. I don't think it's going to change enough to have a flood of people entering the market. Why? Well, because people are struggling. As we look at Black Friday sales, now Black Friday sales are normally supposed to go through the roof, but according to Bloomberg, the Black Friday sales signal the holidays for the US retailers. A group of chains that rely on Black Friday more than peers posted a 4% drop in sales. We know that people don't have as much money to just go out there and spend. The question I want to ask you is, why would you buy now when you can rent? The average monthly payment is floating right around $2,100, $2,200 a month. If you were to go out and buy a house, you're going to be buying that house at $3,300. Why would you spend all that much more money to buy rather than rent? According to this graph, you are literally saving 50% by renting or it's gonna cost you 50% more to buy a house rather than to rent it. Now, no, wait, but Josh, you're paying somebody else's mortgage. Yes, you're gonna save 50%, and when that furnace goes out, when you have to replace the carpet, when you're buying a depreciating asset, or when you lost $122,000 because the market has continued to decline, I hope you will thank me someday for renting. Renting's not for everybody. Some people are gonna buy, but it all is dependent on your situation. Keep in mind, I'm not telling you to rent forever. If you look at the data, if you look at these articles, you'll see that some people would have saved a bunch of money just by renting instead of owning a home. As home prices continue to decline, as sellers continue to having to drop their prices, you're gonna be in a better position. Maybe buy a home that you like in an area that you like rather than being stuck in a neighborhood that's on the outskirts of town that you weren't really wanting to be, but you compromise. And I'm just trying to get you guys, do not compromise, because as you can see, rates are starting to fall. They're not falling enough to skyrocket demand, but also home prices are falling and affordability is coming. The Fed is gonna come out tomorrow and they're gonna talk about interest rates and what they're gonna do with the federal fund rate, if they're gonna keep it tied or if they're gonna have to drop it. If they drop it or if things move, then that could create some chaos and you're gonna wanna pay attention to that. Just because somebody says this is a good opportunity, you wanna ask yourself, who's selling this? Is it the agent who's trying to make their mortgage payment? Is it the agent who's trying to pay off that Land Rover that they bought that now they're struggling to make ends meet? Know who you're taking advice from. Maybe get a couple different opinions. If you're thinking and you need to sell, don't be like this seller who's been chasing the market down for 2.5 months. And now they might even have to sell it for less because as the market continues to drop, so too will the home price. Although I make YouTube videos, it's not like we make money off YouTube. I wanna be clear, we are a real estate company and we feel the same pain. I'm sharing the pain of other agents. We are feeling that too. I just share that with you guys because it's all over right now in the Treasure Valley. Just want to be clear, because other agents are feeling the pain doesn't mean that we're not feeling the pain. I'm sharing it from experience as well as from other agents and other brokerages that have shared the same experience. I mean, we just met with an agent last week who hasn't closed a transaction in 2.5 months. What's going through their mind? I don't know, because sometimes, agents get together and we try to play it off like it's better than it is. I don't think closing a deal in 2.5 months is something that feels very good for that person. I don't want to overlook that. I know that we are struggling as an industry. If you were to come to me today and say, Josh, what should I even be doing right now? What should I be doing? Well, I would say pay attention and make sure you're getting things in order. Get the house in order, right? If you are wanting to buy a house, well, make certain checklists, make certain lists, make certain goals. I want to save up X amount of dollars before I buy a house. I want to pay off this card, or I want to pay off this car, or I want to pay off these certain debts so that my credit score is ready, so that I can jump on an opportunity when it's ready. If you're wanting to jump on an opportunity, it wouldn't be a bad idea to at least talk to a lender. And I wouldn't just talk to any lender, right? There are a lot of lenders out there that are saying, date the rate, marry the house. If you look at the stats, $122,000 lost in your home equity, well, you definitely married the house. And if you can't make those payments, you might have to divorce that house. And dating the rate, well, that was just a fun saying, but you can't really refinance because you have no equity left in your house. When an opportunity comes, you can jump on it because there are opportunities out there, even in a falling market. Be patient for them. Don't act emotionally. Don't let emotions get in the way. Make wise decisions.